Hey everybody, I'm Logan Alec. I'm a CPA. I own Choice Tax Relief. We help folks get into the best possible resolution for their situation with the IRS and the state. Give us a call for a free consultation, 866-8000-TAX. Today I'm answering a question from the Grassroots Gardener. This is a good question. Seems simple. It's actually tough to answer. Grassroots Gardener asks, is CNC better than an offer in compromise? Great question. Practical question, right? I'm a taxpayer. I owe money to the IRS. I think I have a shot at an offer in compromise. I think I have a shot at CNC. Which one should I go for? Is CNC better? Is OIC better? Great question, practical question, tough to answer because it really depends on your situation. I'm not going to leave it there though. I'm going to talk about in this video 4 differences between CNC and offer in compromise. 2 of those differences make an offer in compromise more attractive. The other 2 make currently non-collectible status more attractive. Okay? And hopefully as you understand these factors, it can help inform your decision as to whether to go for CNC or offer in compromise. So without further ado, let's get into these 4 factors. Factor number 1 is finality. Finality. The offer in compromise offers you finality with respect to your tax debt in a way that currently non-collectible status technically does not. What do I mean? When you submit an offer in compromise and the government accepts that offer, they write off any additional tax debt, penalties, and interest in excess of what you offered, assuming that you pay your offer amount and that you stay in compliance for the next 5 years. You got to file on time and pay on time. Okay, if you don't do that, you default your offer, you owe what you did before. But there's a finality there. Once you've paid that offer amount, and it doesn't matter if you make millions of dollars a couple years later. The IRS can't say, we shouldn't have accepted that offer. You have millions of dollars now. Pay up. You can't do that. They've accepted it. It's a legal contract. There is not this finality with IRS CNC currently non-collectible status. It is technically a temporary solution, a temporary resolution. When you get placed in IRS CNC status, the IRS sends you this letter 4624C. You can kind of see it up there at the upper right. And what does this say down here? It says, case closed, currently not collectible. What does it say under that? We temporarily closed your collection case for the tax periods above because we determined that you can't pay the money you owe at this time. Temporarily at this time. This is a temporary thing. Okay? You get placed in CNC status, and assuming the IRS's 10-year time limit to collect that it hasn't fallen off by then, we'll talk about that a little bit later. Let's say you get placed in CNC status today. Oh, but next year you make $1 million unexpectedly. IRS are going to see that on your tax return, and they're going to say, whoa. Yeah, maybe back then when you were making $8 an hour, you were not collectible. But now that you made $1 million this year, you are probably collectible, and you're going to have to prove again that you're not, right? And you probably couldn't, right? Quite frankly, if it's just $1 million landed in your lap. So the IRS can go back after they place you in CNC and say, hey, wait, we don't think you qualify for CNC anymore. You got to pay up. There's a systemic removal based on if your income reporting or tax return goes over a certain threshold. That's based on your monthly expenses when you're placed into CNC. So there's ways the government can take you out of CNC. Now, $1 million is an extreme example. Okay, let's say that your income went up by a smaller amount, right? But enough to trigger IRS censors, right? A normal amount, let's say. Well, in that case, you may be able to prove to the IRS, yes, I'm making more income, but I also have more expenses, right? We had another child, our household expenses increased. We have these medical issues, our household expenses increased, right? So an increase in income doesn't automatically equate to being kicked out of CNC because now you make too much, right? If the necessary limiting expenses that you have calculated according to the IRS rules and limited to IRS national and local standards, if you can still prove to the IRS that you still qualify for CNC even though your income has gone up, you can still stay in CNC, okay? So finality, right? Now, caveat here. CNC, though a temporary solution, technically can become a permanent solution because the IRS has 10 years to collect a tax debt from the date it's assessed. Now, those 10 years can be extended. It can be tolled for certain events, such as the submission of an offer in compromise. But while you're in CNC status, that 10-year time limit the IRS has, it continues to run, right? It continues to wind. So theoretically, if you can stay in CNC status until your tax debt drops off, then this temporary solution of CNC has become a permanent solution. If you'd like to know more about the IRS 10-year time limit to collect a tax debt, please watch the video that's linked to in the upper right-hand corner of your screen. It's on the IRS statute of limitations, right? That's what they call it, the time limit that the IRS has to collect your tax debt. There's also other statutes. There's a statute the IRS has to assess, blah, blah, blah. But right now we're talking about the collection statute. How long does the IRS have to collect a tax debt? So CNC can become a permanent solution, right? Can become a permanent solution. So that's factor number one, finality. That works in favor of the IRS. IRS gives a more immediate, an offer, the IRS works in favor of an OIC. An OIC gives a more permanent solution in the shorter term. Second factor, and this one again favors the offer in compromise, is that with an offer in compromise, you will avoid the IRS filing a notice of federal tax lien against you. Or if the IRS has already filed a notice of federal tax lien against you, it will be removed upon satisfaction, upon payment of your offer amount, okay? Now, this isn't a big deal. Well, okay, and then what with CNC, though, the IRS is going to file a notice of federal tax lien against you, in all likelihood, right? Now, this may or may not be a big deal to you. What is a notice of federal tax lien? Notice of federal tax lien is basically the IRS making it public record in county and sometimes state records that you owe the IRS this amount for all these years and in sum total this, right? As of the date of the lien filing. Now, you may not care about this due to your situation, but what kind of a person would care about that? The kind of person who might be looking to get a loan or a mortgage. Because if your lender sees, oh gosh, the IRS has laid claim to your assets, and you're coming to us to borrow money to buy a house. Well, oh gee, what if we have to foreclose on your home and then we sell the house, right? The IRS is going to get their money before we get our money, right? It's an additional risk to a lender who, when underwriting you for a mortgage, is looking to reduce their risk, right? So, OIC, no notice of federal tax lien. CNC, the IRS will file notice of federal tax lien against you upon placement into CNC. That's just how it works. And this makes sense if you think about it, right? Because with an offer in compromise, once you paid your offer amount, your remaining tax debt is gone. It's donezo, right? Why would the IRS keep that lien around or file a lien against you? There's no more tax debt to lien up. With CNC, the thinking is, in protecting its own interests, it being the United States government, is look, we're going to cut you this deal for CNC. You don't have to pay us anything. But then they want to protect themselves because what if you go turn around the next day and sell your home and cash out all that hundreds of thousands of dollars of equity, right, that you can in your home. Now, this brings me to my next point, which is the next factor. It is easier to get into, and this one's in favor of CNC. It is easier to get into CNC status than it is to qualify for an offer in compromise in general, okay? And one big differentiating factor is, in fact, equity in one's home, okay? If you have equity in your home, that will count against you for IRS offer in compromise purposes. Even if you can't access that equity, even if you have your credit is shot, you can't actually take money out of your home, that equity counts against you in an offer in compromise. Now, the way equity is calculated, standard way is quick sale value. You take the fair market value times 80% less the debt on the property. That's generally how the equity is calculated in your home for offer and compromise purposes. Why does this camera make my face so big? Now, there could be other things you could argue about your home that could cause you to get a lesser value of your home for offer and compromise purposes. Hey, there's all these repairs. It's unique in this weird way that wouldn't make it appealing to most buyers. Right, but that's kind of getting sidetracked here. Point is, if you have equity in your home, it's going to count against you for offer. However you calculate it, it's going to count against you for offer and compromise purposes. CNC. If you can prove to the government that you can't get money out of your house, look, IRS, I went to this lender, they denied me because my credit's bad. I went to this lender, they denied me because my credit bad and my debt to income ratio is way too high, right? And you can show that to the IRS, and they say, all right, okay, fine. You can't access this equity in your home. We're going to let you stay in your home. We're going to place you in CNC. We're going to file notice of federal tax lien, right? So if you do decide to sell your home, we'll get the proceeds up to the amount of the lien, right? So that's one example. That's one way in which it's easier to get into CNC than offer and compromise. Another kind of part of this third factor here is, and why it's easier to get in CNC than get an offer and compromise approved, is the process for getting an offer and compromise approved is much more stringent. The IRS examines your financial situation in much greater line-by-line detail. It's like an audit. Than it does when approving you for CNC currently non-collectible status in general. I'm speaking generally here, because the process is simply different. Assuming you don't have a revenue officer assigned and you're in an IRS ACS, automated collections, the call site-based collections that the IRS has, this is where the majority of taxpayers who owe the IRS, that's where their accounts reside in ACS. The process for getting into CNC probably wrapped up in 2 to 3 months, those negotiations, okay? Sent over the phone with an ACS operator, right? It has to go to the manager approval. You got to make the taxpayer's case. There's documentation to submit. There's verbal back and forth. And yes, they do look at documents. I don't want to make ACS CNC operators act like they just take everything for your word. They do look at documents. They do check historical income. They do a degree of due diligence, okay, in approving CNC. And they push back with CNCs a lot, okay? Don't get me wrong. But there is not the same level of scrutiny as for an offer and compromise. And this goes back to the finality thing, right? Once the IRS signs off on that offer and compromise, that tax debt, any excess tax debt beyond the offer amount is done. It's gone. It's donezo, right? Unless the taxpayer defaults in the next 5 years. But with CNC, there's not that finality, right? So the IRS might, we might catch them again, right? They start making more money, we'll reevaluate the case. So IRS CNC, that can be wrapped up 2 to 3 months, right? If you're with ACS. Offer and compromise is a completely different ballgame. With an offer and compromise, you submit this whole pack. You got to fill out the 433A OIC, the Form 656, all this documentation, and you submit it to a specialized, centralized offer and compromise unit. There's 2, one in Memphis, and there's the Brookhaven campus and a Holtzville, which when you send it to depends where you live. And these are special offer and compromise units, staffed by special people called offer examiners. Sometimes your offer gets referred out to a field office where there's an offer specialist, right? And these folks are like auditors. They're going with a fine-tooth comb over everything in much greater detail in general than you would experience when you're going for CNC with ACS. Okay, it's a much more stringent process. You're much more exposed with an offer and compromise than you are with CNC. Okay, and you feel it too. It's a pretty invasive thing. And as a result, the offer examiner is much more likely to catch something, some irregularity, some extra stream of income, than when you're just going for CNC with ACS. Okay, so third factor, this one is in favor of CNC. It's just speaking very generally and very roughly here, it is easier to get into CNC status and to get an offer and compromise approved in general in the vast majority of cases. Okay, that's factor number 3. Factor number 4, this one's in favor of CNC, is that when you're in CNC, the IRS has deemed you not collectible. It cannot collect from you. You do not have to pay the IRS anything while you're in CNC status. With an offer and compromise, it's an offer. You can't offer 0. You got to offer something. So with an offer and compromise, you do have to offer something to the IRS in your offer. Now, it could be as low, we've gotten $100 offers through, right? Because by the IRS's math, they would actually qualify for like 0, but you got to offer something, right? So so that works in favor of the CNC. So those are the 4 factors. Now let me kind of paint a picture of maybe one kind of person who may gravitate more towards an offer and compromise, and another kind of person who may gravitate more towards CNC. Actually, let's start with someone who would gravitate more towards CNC. CNC, it is perfect for somebody who is broke, and they're broke, and they can prove they're broke in the eyes of the IRS. All their money goes to pay to their necessary living expenses for themselves and their family. They have no assets, they're broke, and it is unlikely that their financial situation will improve before their tax debt drops off. Because if that's the case, then it's very likely that they will be able to stay in CNC and currently non-collectible status until their tax debt drops off without having paid the government a dime. And in that way, they have dealt with their tax debt problem. Their tax debt is now written off at the end of the IRS's statute of collections to collect, and they haven't paid the IRS a dime. Okay? So oftentimes people who meet this criteria are older and retired or soon to be retired and about to be living on fixed income, where their only increase in income is going to be those cost of living adjustments, right, for their fixed income. Why does it do this? Right, it's unlikely they'll ever be removed from CNC, and their tax debt will just drop off because they're not going to be made. Their financial situation is extremely unlikely to improve. On the other hand, someone who may be more interested in offering compromise, despite how much more stringent it is someone who may be younger, right? And they're who knows, their income may increase a lot in the next few years. But right now they've had a tough past few years, right? And they can show that and they can prove that. But their prospects, there's a chance they may improve. These types of folks, CNC probably isn't the way to go if they qualify for an offer, I'm saying. Because CNC, they can get in CNC now, but if they're making way more money in a couple of years, they might get kicked out of CNC and they may have to pay the IRS something, right, in an IA. This type of person, if they qualify for an offer now, they might want to go for that offer now, right? So you have that finality to the situation that you don't get with CNC. So obviously there's other fact patterns here based on the factors I provided. If you want to avoid a notice of federal tax lien, the offer is probably the way to go. If you don't mind a notice of federal tax lien, CNC may do the trick. But this is all this is very high level here. It's there's every situation is different. I guess that's what I'm saying. And these are the major factors. I mean, there are other factors here between offer and compromise and CNC, but I hope this helped you and others who are thinking about or weighing your tax resolution options. If you'd like to see my video about IRS currently non-collectible status, upper left-hand corner of your screen, and my video on offer and compromise, bottom left-hand corner of the screen. I obviously have other videos about these things on my channel, but those are kind of the cornerstone pieces of content on those two resolution options. If you'd like a free tax relief consultation, reach out to us at Choice Tax Relief, 866-8000-TAX, or visit choicetaxrelief.com. Fill out the form on our website, and we will reach out to you. Thank you so much for watching, everybody, and I will see you in the next video. Bye-bye.